Stephen's an associate at Brewstein and Manassevit, and really an expert on personal activity reports. And you all really focus on, I guess originally Department of Education regulations, is that right? But we'll be able to help answer some of those specifics that you all had about reporting on staff time, as well as an overview of the issue. So thanks so much, Stephen.
Thank you. Can everybody hear me? Okay, so I assume they'll deal with the volume if that becomes an issue. As Tim said, my name is Steve Spillin. I've been with Brewstein and Manassevit for about 10 years now. We focus primarily on federal grants management. Now, while generally we focus on the U.S. Department of Education, we also work with a lot of grants under the Workforce Innovation and Opportunity Act, the Rehabilitation Act, and so on. So we've worked with DOL, HHS, a lot of different federal agencies. I am sorry that Tiffany Winters couldn't be here. She is currently on her honeymoon, so it's not that she blew you guys off. There were just other plans that were made. So unfortunately, you're stuck with me for a little while. What we're going to go through today are just a general overview of the new rules under, it's referred to as Part 200, the Uniform Grant Guidance. At one point, it was the Super Circular, then it became the Omni Circular. They've changed the name about half a dozen times. Generally, when I'm going to refer to it as Part 200 or the Uniform Guidance. Anytime I use either of those terms, I'm referring to the exact same rules. We're going to go through the general structure of those the new Uniform Guidance. We're going to talk a little bit about the cost principles. We're going to go through the requirements of determining what is an allowable cost and how that's going to apply to your time and effort documentation. Then we're going to go through the old rules to compare them to the new rules. You're going to see how, most of you are familiar with the old rules under A122, 87, all the other old circulars. They were much more structured, much more rigid requirements, and that led to a lot of audit findings, some of which we're going to talk about. The new flexibility that's been offered by OMB and the other federal agencies that have adopted these rules, it really gives you much more room to maneuver, so to speak, with how you want to track your time. However, and we're going to get into this as I get into the actual rules themselves, it's an area that the term I like to use is they give you a lot of rope with which to hang yourselves. Because there's another requirement built in there that if you don't, whatever new system you come up with, if it doesn't meet HHS standards, they can require you to keep a PAR, and they can determine what's going to be in that PAR. Okay, so we're going to talk about the flexibility, but then I'm going to give you a little bit of a warning to maybe hold off on any changes you might want to make. All right, and then finally, we'll talk about what to look for moving forward when audit findings start popping up under these new rules, give us a better idea of what we're looking for. And then I have some of your questions that were asked earlier in the day. They were written down. I'll go over those. As questions come up, go ahead and throw up your hand. You don't have to wait till the end of the presentation. If you have a question, raise your hand. We'll bring you a mic, and we'll go through. That way, if it's about a slide that's currently up there, it's better to have that information up there as you're asking the question. Okay, so going through this is a general overview of the Uniform Grant Guidance. It's a combination of all the old circulars. Now, HHS had to deal with this. ED had to deal with this when the program was still over there. But you had federal agencies that were administering grants where they had grantees that all had to go under different rules. Nonprofits had your own rules, state and local governments, Indian tribes, institutions of higher education. So not everybody was held to the exact same standards. Government recognized this as a problem, went through, and this was a multi-year process. For years, we were promised, you're going to get the final rules, you're going to get the final rules. We finally got a glimpse of them in 2013. Final rules were issued about a year later, and now, with the exception of procurement rules, everything under Part 200 is now applicable to all of your federal grants. All right, so it's combined all of these old circulars, including the audit rules. Everything is now all in one spot with Part 200. All right, the effective dates for all direct grants directly from the federal agencies, the rules were effective as of December 26, 2014. For any pass-through grants, state-administered programs, funds that flow through down to sub-grantees, those were effective as of July 1, 2015. Now, for the third bullet there, everybody needs to, if you have these slides in front of you, get your pen out and mark something down for me real quick. July 1st, 2017. That's what the third bullet should say, 2017. This changed. Originally, they were going to allow for a 1-year grace period. They upped it to a 2-year grace period. So for all state-administered programs, anything where the funds flow through a pass-through entity, all non-federal entities, so anyone that receives federal funds, will have until July 1, 2017 to get their new procurement rules in place based on Part 200. Now, that's not what we're going to talk about today, but it's an important part. I just wanted to point out that until you have those new rules in place, your new procurement policies and procedures, you still have to operate under your old procedures. Okay? And then for indirect cost rates, the new rules would apply whenever you're up for your negotiation of your indirect cost rate. All right, because this combined many different OMB circulars, it included the cost principles, included the administrative rules, and the audit rules. This is the general breakdown. We're going to spend almost all of our time today in the cost principles, subpart E. Okay. One of the new requirements under the UGG or under Part 200 is that every non-federal entity, so anyone that receives federal funds, has to have written policies and procedures on how you determine if a cost is allowable. Now, for a lot of non-federal entities, for a lot of grantees and subrecipients, a majority of your costs are tied to your personnel costs, how you're paying your staff. Okay, that has to be included in this process. What's the determination process for determining who gets paid, how much they get paid? Make sure you're following all the different rules. Now, they've specifically said they don't want you to just copy the allowability procedures in Part 200. They want you to look at these and figure out how they're going to apply directly to your non-federal entity. All right, so just going down the line, looking at necessary, reasonable, and allocable. All right, the salary that you're paying to a particular staffer, is the work that staffer doing necessary for the purposes of your program? Is it helping you achieve a program goal or a program objective? All right, the reasonableness, they use what's referred to as the prudent person standard. Would a prudent person in your particular, at your non-federal entity, figure that this is an appropriate salary to pay to that person? Okay, now that's going to be somewhat subjective depending on what state or what locality you're in, but would a prudent person in your exact situation or in a like situation, would they assume that this is a reasonable salary to pay? Now, first thing you're looking at is the work that the employee is doing. All right, if it's benefiting the program, if it's actually completing a program objective, great. Next, look at how much you're paying them, how much you charge into that federal award. And that brings us into the question of allocability. When we're talking about the rules, we're going to focus on cost objectives. But regardless, if you're paying an employee with federal funds for a certain amount of work, let's say you're only paying them for 60% of the work that they do out of federal funds, whatever federal program you're paying them under, that has to be the program that's benefiting from at least 60% of the work that they do. You can only pay them an amount that's commensurate with the benefit that the program receives. Okay, and that determination obviously is going to be made in the documentation we're going to talk about. You're going to see the breakdown for cost objectives, for funding sources, but someone has to be making that determination that, okay, this person is spending 60% of their time on the federal program and that we're paying them as such, or they're spending 100% of their time on the federal program. All right, just so long as, when you are working through your procedures, we don't need a name of a person that's going to make that determination, but who within the organization, what office, what position. All right, this is what they're looking for, and it's just to show that you have strong internal controls, that there is somebody at the highest level that's determining, okay, this is how much this employee should be paid, this is the source they should be paid from, and there has been a review to make sure that this is actually, that we're only paying them for the work they did that benefited the program. Has to conform with all federal law and grant terms. Now, that means not just the authorizing statute or the program regulations, but the individual requirements in your grant awards or your subaward notifications. In some places, they still call them subcontracts. What I'm talking about is if you have funds awarded to you from the state, and then you're using those to carry out the term of the grant, to carry out the objectives of the grant. That's what the feds refer to as the subaward. All right, so if you still call them a subcontract, I know different states, they have different words for it, but what I'm referring to is the funds that you would get from the state or that the state would send out to the subrecipients to carry out the actual terms of the program. All right, so you have to go back, look at that subaward agreement, see if there's any additional requirements that have been placed on you, even outside of what these federal rules are. One of the questions I always get is our state requires us to do X, Y, and Z on our time and effort forms, but I don't see that in the federal rules. The states or the pass-through entities are always allowed to be more restrictive, to add more requirements, if they feel it's necessary. But any additional requirements they're going to place on you is going to be included in that subaward agreement. So go back and look at those grant terms to figure out exactly what you're going to be held accountable for. Has to be consistent with all state and local policies. At the state level, sure, they can be more restrictive. If your locality has more restrictive rules, or if your non-federal entity has written policies about how you track your time, and it's somewhat more restrictive than the federal rules, if an auditor comes in and looks and sees that you're compliant with the federal rules, but you're not following your own procedures, that's an audit finding, because the federal rules require you to follow your own policies and procedures. So go ahead and check state policies, check your local policies, see if there's anything that would require you to go above and beyond what's required just for federal compliance. Has to be consistently treated, and we're going to talk about this in a few minutes. When I say consistently treated, I'm looking at two different things. One, direct versus indirect. All right, if you are charging somebody's salary as a direct charge, you can then not include that salary in your indirect cost pool. All right, or vice versa. If somebody's salary is being recovered under indirect costs, you cannot then direct charge that salary. That's double dipping. That's an audit finding. So you have to make sure it's consistently treated. Beyond that, because they want consistent treatment between any state or local funds you might be getting and the federal funds. They don't want you following two different sets of procedures for the funds. They want you to have one set of procedures for all the funds you spend that are compliant both with federal, state, and local requirements. Have to be in accordance with generally accepted accounting principles. Really what we're talking there is most people track everything by percentages on your time distribution records, that your accounting records, however you do your payroll, that just an auditor could come in, review your payroll records, and not necessarily have to have you walk them through every single step. That, okay, this is generally the way you're going to handle payroll. This is how the funds go out. This is how we're tracking them. Whatever in your area what the generally accepted accounting principles are. Can't be included as a match. Now, if you're working with any other federal programs and there's a match requirement, you just have to make sure that you're not using any funds you're getting from HHS to match a grant for another award you might have. All right, unless it's specifically authorized by statute, you cannot use federal funds as a match for another federal program. Net of all applicable credits, that's not really going to apply that much to your time and effort documentation. All that's saying is if you've somehow brought in money, interest rebates, overpayments that were returned to you, any funds that have been brought in outside of program income, you have to make sure you spend that before you request additional funds. So as far as personnel costs, the only thing we're looking at there is that you've used those funds to pay down your personnel costs before you start requesting additional drawdowns or additional reimbursements. And then finally, everything has to be adequately documented. Now, this was a much bigger deal under the old A122 and the old circulars than it is going to be under the new time and effort rules. But still, even if you're only paying a person exactly what you should be paying them, all right, they've done 60% of their work benefited the program, 60% of the program funds are what you use to pay that part of their salary. Great. If I can't follow that through your documentation, if there's no paper trail, that's an audit finding. You're going to owe that money back to the federal government. All right, this is what I was saying earlier. Direct versus indirect. All right, it's got to be one or the other. It can't be both. Now, I believe this was a question that was asked earlier today. Our state is under the belief that the executive directors should track their time by cost fund rather than be indirect. All right, under the new rules, if you have clerical staff, administrative staff, or anyone who oversees multiple programs where the work that they're doing cannot easily be divided between the different programs, that's generally going to be an indirect cost. You're not going to be able to direct charge their salary because you can't pull out a percentage that you can charge the federal award. So what the rules say is anyone, administrative or clerical staff, should be treated as indirect unless they meet all four of these requirements. All right, you have to show that this staffer or the work that they're doing is integral to the federal activity, that the work they're doing is integral to the program. Without them, you could not administer the federal program. You have to be able to identify a specific individual with that activity. Okay, this is the person who's doing the work that without which we could not administer the program. All right, those costs need to have been explicitly included in your approved budgets. And then finally, you have to make sure you're not also recovering under indirect. Only under those four cases can you direct charge administrative or clerical staff. And a lot of times it's going to apply to a lot of supervisors. All right, not that they would necessarily be considered administrative or clerical, but the work that they're doing might be benefiting multiple programs. And you can't just, it's not easy to just pull out that percentage. All right, so when you have that, you can only direct charge if you can follow each one of these. All right, and to show that such services are integral to the activity, while you may not be able to come up with 60% or 70%, what they're saying is that you can show some sort of benefit. This is the benefit that the programmer is receiving from the work that they're doing, and that is going into your determination for exactly how much you're paying out of which program to that particular staffer. All right, if you can't meet all four of those, it's got to be an indirect cost. And if you're direct charging without being able to meet all four of those requirements, that's an audit finding, and you're probably going to have to pay whatever amount of federal funds you paid to that person is probably going to be disallowed, and you're going to have to pay it back. All right, and then I just included this as to why this is a big deal. Payments made for costs determined to be unallowable have to be refunded, including any interest, to the federal government in accordance with whatever instructions they've provided. Okay, there's an old rule or an old saying of it's better to ask for forgiveness than permission. Well, that is absolutely not true when it comes to federal grants. The process of going through and figuring out exactly how much money is going to be considered unallowable, how much has to be paid back, where you're going to find the money to pay those funds back, this is all a giant headache that if you can avoid at all costs, you should. Now, that's not to say if you have a cost disallowed, that's the end of the conversation. All right, a lot of the work that my firm does will work with grantees and subrecipients. If they have a cost that's been deemed unallowable and they have to pay it back, you know, if it was a program team that came in and did a review or if it was based off of your single audit. Once the federal agency makes their final determination, that's not the end of the conversation. All right, we've worked with grantees that were having personnel costs completely disallowed, and we worked with them on what's known as a reconstruction. Affidavits signed that say, I could say, you know, from my own firsthand knowledge that this employee spent this amount of time working on this program, and therefore the salary should have been, and you lay out the amount. All right, a lot of federal agencies have accepted that, worked down the amount, and then you end up paying back a significantly less amount of repayment than you would have otherwise. But with a lot of these grantees that we've worked with, this is a 2 to 2.5 to 3 year process. All right, it takes about a year for them to get that final determination. Once you appeal, generally the steps you have to go through with any sort of legal system, it takes forever. And so you might not have this resolved until 2 or 3 years down the road. All right, so while it's not the end of the conversation, the goal should still be, let's make sure we're not having any costs disallowed, that we're following all the rules. It sounds like that should be commonplace, but if it was, I don't think my firm would still exist. All right, obviously people are having issues with this, so that's why we're going around telling everybody what the rules are to make sure you have the tools to avoid these kind of headaches down the road. All right, so the old rule under A122, if you were paid with federal funds, you had to maintain a personnel activity report. It had to be after the fact, had to account for your total activity, had to be signed by the employee or a supervisor with firsthand knowledge, and had to be prepared at least monthly and coincide with one or more pay period. All right. Every one of those requirements was non-negotiable. If you missed any one of those points, that was going to be an audit finding. Okay, a lot of the issues that we saw were people weren't doing it after the fact. If you were going to leave town on June 30 and you weren't going to be back till August or something like that, you might sign off on a PAR on June 27th, but the period ran through the end of June. That's not after the fact. Okay, because of that, even if everything else was correct and you were still paid the way you should have been, that's an audit finding. They'd ask for the money back, and then you'd have to go through the process of showing, no, we really did pay what should have been paid. But again, that's a headache you want to try to avoid if you can. All right, another common finding was no affirmations. All right, the form should have a statement on it that says, you know, I'm certifying that this is the time that I spent and that, you know, I'm basing this either off of, you know, I was the one doing the time, or if you're a supervisor, that it was based off of, you know, your firsthand knowledge of how that employee spent their time. I know a lot of grantees use a system where both have to sign. You have the employee sign and a supervisor sign. That's a much stronger internal control, and you're going to have auditors are going to be much less likely to question a PAR that has both signatures on it. Okay, and again, that certification statement needs to be there to show that, yes, I'm certifying. I'm not just signing a document. I'm actually signing this to say that, yes, this is the amount of time I've spent working on the program. This is the amount of money I was paid based on that work. The problem is sometimes somebody would sign it and you wouldn't know who it was. Is this the employee? Is this the supervisor signature? If it wasn't clearly labeled on the form, I have no idea who signed it. And if a supervisor did sign it, how do I know they had firsthand knowledge? Okay, so no certification statement, no comment or no title as far as who was signing. Auditors had questions, and anytime that comes up, it's going to raise a red flag. And that's going to make the auditor look much more closely at your documentation. And our general rule of thumb is you don't want the auditors to look at anything any more closely than they have to. Pre-populated forms. Everything was already filled out. They just had to sign their name to it. All right, that's not necessarily out of compliance. The problem is if you have no mechanism for making sure there's some sort of reconciliation, then an auditor is going to question, well, how do I know that they really read through and made sure this was accurate and that they didn't just put their name on it? All right, so we've always recommended generally avoid pre-populated forms. Doesn't mean you can't use an electronic form. It just means make sure that if the timing and everything else is actually already put in there before the employee or supervisor goes to sign it, that they actually have to review the document and ensure it's accurate before they put their signature on it. All right, it's an extra safeguard that as long as you have that in place, you can avoid that kind of audit finding. Common findings where they didn't account for the total time. Okay, that's still a requirement under the new rule, as it was under the old rule. If you're only paid 50% from federal funds and the other 50 comes from a state or local source, all of your work still needs to be included on your time and effort documentation. All right, if you're only paid 10% from federal funds and everything else comes from state or local, doesn't matter. The moment you're paid with federal funds, you have to keep time and effort documentation, and it has to account for your total activity. All right, everything you've done, not just the federal work that you've done that you were paid for from federal programs. For 200%, that's what we like to refer to as fraud. We're going to talk about that when we get to the new rules. You have to get as close to 100% as you can without going over. Because all of our high school coaches lied to us, you can't actually give 110%. All right, you can only do 100% of your time. If you were supposed to work 40 hours in a week and you worked 60, it's great that you worked 20 hours more than you needed to, but 100% of your time is the 60 hours, not the 40 you were planning on. All right, we're not concerned with what you were budgeted. We're concerned with what you actually did. And I'm going to talk about doing a reconciliation between budgeted amounts and that when we get to the new rules. But just make sure that you're accounting for total time, all right, which cannot be anything above 100%. And then finally, does not identify the cost objective. That's also a rule that carries over from the old circular to the new rule. You need to break it down by actual cost objective. All right, you can't just say, I worked this amount of time on an HHS grant. That's not good enough. And within certain grants, you're going to have multiple cost objectives. If there's any funding from a program that you have to track separately, administrative funding, any set-asides, things like that, that's going to be its own cost objective. So any funding you have to track separately, that's the cost objective, and if that's the pot of funds you were paid from, and that's the cost objective you were working on, that's what has to be listed on the form. You can't, we've actually seen examples of the cost objective was federal programs. That's an audit finding. Or HHS grant. That's an audit finding. My favorite one to date was the cost objective was doing my job. Well, I commend you on doing your job, but your non-federal entity is now going to have to pay back your salary to the federal government. Okay, so just make sure you're actually going by the cost objective. All right, those are the old rules. Any questions on that before we move on? Perfect. Every time I don't get questions, I can only assume, you ruined my perfect record. Okay.
Yes, my question is, how do you split vacation and sick hours in different cost objectives? Let's say the employee covers different programs. Do you estimate? How do you apply the cost objectives when there's vacation and sick hours?
If we're talking about leave, whether it's sick leave, vacation, right, paid leave, it's just got to be done equitably across. So if you're paid 60% from federal funds, you can't charge 100% of your sick leave to the federal program. You got to break it down the same way. Okay, 60% of that amount of time. Now, if whatever leave days you use, whatever hours you use, it has to somehow be worked into your time and effort documentation. Now, there are different ways you can do that. There's an accrual basis, there's an estimation. Generally, just make sure whatever method you choose, check with the pass-through entity, make sure that they're going to sign off on that. And then it has to be included in your own written policies and procedures. Now, this is one of the areas I was going to get into a little later, but it makes sense to talk about it right now. Under the new rules, there are multiple areas where all non-federal entities, grantees, subgrantees, everybody now has to have written policies and procedures. Time and effort isn't one of those. But if you go to section 200.431, which deals with fringe benefits, that includes leave, vacation, things like that, one of the rules to using federal funds to pay for sick leave is that it has to be in accordance with your written policies. All right, so generally time and effort isn't required, but if you're going to charge sick leave or any other fringe benefits to federal awards, then you have to have a written policy for how you're going to do that. All right, and we'll be talk a little bit later about making sure that your new time distribution records are part of your framework of internal controls. Having procedures is really a best practice. It's not officially required, but it will make your life easier if you have them. Did I answer your question? Okay. Any other questions before I move on?
I'm going.
We have time. You don't have to run.
Hi, going back to something I thought I heard you say in passing, I want some clarification. Other funds have to be used before you use the federal funds?
No, not.
I mean, like if.
Go ahead.
Like if you have donations that are given in general, you have to figure out and use those before you can use the federal funds?
Donations are different. The category
Thank you.
referring to, did everybody hear the question? Okay. The category I'm referring to is applicable credits, which has a specific definition, which unfortunately I don't have the rule in front of me, but it includes things like if you were under contract and you paid a contract, there was either an overpayment. Either you paid them more than you were supposed to, or they didn't deliver something they were supposed to, and those funds are returned. It was federal funds. So what it really is any federal funds you've spent that have somehow been returned back to you, you need to spend that before requesting any additional reimbursements or using any other federal funds. All right, and that's under the allowability rules. It says that that any costs you're drawing down or you're seeking reimbursement for have to be net applicable credits, meaning you spend those applicable credits before. Otherwise, even if you still are spending it on an allowable cost, if you draw funds down or seek a reimbursement before you've spent an applicable credit, that cost is going to be disallowed. Okay, now donations that's not within the definition of an applicable credit. Yes. Sorry, hold on, we got to wait for the mic.
Okay, what if you pay for an expense in one fiscal year, but then you get refunded in the next fiscal year?
Just make sure you're spending that before using any of the next fiscal year's funds. Now, I mean, if it happens where you're already well within the fiscal year and you've started spending the next fiscal year funds, they're not going to penalize you for that. You just have to make sure that once you get that money back, that is spent first. All right, it's in the same line of first in, first out. That was money you've already received, you've already spent. All right, now you've got it back through, sometimes it's indemnities on losses, interest rebates, things like that, anything that's come back to you. They just want you to spend that first before requesting additional payments or using funds that were awarded for the next or current fiscal year. All right, it's just that you've already spent these. So now that it's back to you, they want you to spend that again before you spend something else.
Thanks. You've used the word several times, must be signed by a supervisor, must be signed by a supervisor. If I send my schedule of, my PAR to my board chairman and he acknowledges it with an email, is that the same?
I would say no, and here's why. There has to be some sort of a certification that that board member has firsthand knowledge of how you spent your time. And
he's my supervisor.
Okay, does he have firsthand knowledge aside from the fact that you just sent him the PAR?
No, but I can't have a subordinate signing it because they don't know.
Well, okay. Under the federal rules, it only has to be signed by an employee or a supervisor with firsthand knowledge. Now, we recommend you do both. But if there's nobody, if you're the top of the food chain and there's nobody else above you that has firsthand knowledge of what you've been doing, then your signature should be sufficient. So what I'd recommend is if you have policies that specifically state you want both, work something in there that says unless, this particular position, whatever position you have where there's nobody higher that has firsthand knowledge, make sure that's noted somewhere in the policies and you won't get dinged with an audit finding.
This may not be a question for you, the next half of my question, but it goes to the folks here from ACL. Have centers for independent living through audit findings been asked, short of fraud, been asked to pay back funds? Because frankly, that's just not an issue you could go out and raise funds for. You know, hey, give us some money so we can give it to the government.
I can probably answer that since the folks from ACL are outside the room. This is Paula. There have been situations where someone has had to repay. They are infrequent. Most of the time they'll negotiate through with you how you will handle it and what you will do next. So most of the time the first process is to fix your process, and they'll want to see proof that you've fixed whatever the error is. We're small. We don't have a lot of money to give back, and so there isn't a lot of incentive to charge us for it. So it is infrequent, but it has happened.
Well, and to piggyback on that answer, under the new federal rules, both in the flexibility they've offered under time and effort and in the new audit rules that have been put in place, which I think somebody else either has or will talk to you about during this conference, all federal agencies are encouraged to, I'm not going to go into detail since someone else talked about it, but it's known as cooperative audit resolution. And the whole idea is to work with you if there's an area of noncompliance, rather than just saying, haha, we got you, give us our money back. I mean, you laugh, but that is kind of the attitude auditors have been operating under for about the last 20 years. Now, under the new rules, there was a comment that was offered by COFAR, which was the Council on Financial Assistance Reform, which is the group that spearheaded the new rules. And when they talked about the flexibility that they were offering under the new rules for time and effort, they specifically said, doing this the way we're going to do it, tying it to your internal controls and stepping away from the who has to sign it, when it has to be signed, and those other more regimented requirements. It was because the whole purpose of the rules, according to COFAR and OMB, is to make sure that you're paying your employees for work that they've actually done, not generate audit findings. And that's what the old rules were doing, is they were generating audit findings, even if you were doing everything correctly, but you didn't fill the form out right, it was going to cause a problem. Now, they've recognized that, and they're trying to move forward in a way that says, okay, we're going to focus more on your outcomes. Did you actually pay them for the time that they worked for? And if you can show that you did, they're not going to go after you for any additional funds. Or at least that's what COFAR and OMB are hoping for. Towards the end of the presentation, we'll talk about how we think that's actually going to work out with the auditors and the federal agencies. Yeah.
I just wanted a little bit of clarification on something you said about the different cost objectives.
Yeah.
How you don't separate the cost objectives by the funding source itself.
Well, okay, because the funding source and cost objectives for a lot of programs are two different things. The example I'm most familiar with isn't one that's going to help a lot of people in this room because it's an education-specific issue, but it's under a federal award. So if under funds you have a 5 or 10% administrative set-aside, that's its own cost objective. So you have the local award that you've received is one cost objective. The administrative set-aside is another cost objective. So if the work that they're doing is administrative and they're getting paid from that pot of funds, that's the cost objective that has to be noted on your time and effort documentation. Okay, so the funding source isn't necessarily different, but it can be. Like if you look at the funding source as, okay, this federal HHS program is the funding source, but within it there are multiple cost objectives. Just make sure that the documentation breaks it down by cost objective. All right, moving on. And again, you can ask questions throughout the whole presentation, and then once we're done with this, I believe lunch is next. I will stick around if anybody has any additional questions. That way I'll make sure everything gets answered before I leave. All right. So the full citation for what I've given you right here is 2 CFR 200.430, starting in paragraph I. Reason I say that is because I've gotten so used to this that I just say section 430. But that's the full citation, so if you ever want to look it up, and I encourage everybody. This presentation is good. It's going to give you the information I think you need. It is not a substitute for going through and looking through the rules yourselves. Make sure you're as familiar with them as possible. But this is the new standard. Charges to federal awards for salaries and wages have to be based on records that accurately reflect the work performed. That's the standard. Everything else we're going to talk about fits underneath that and shows how you show that you're meeting that standard. But that right there, that's the standard. I didn't say anything about when it has to be signed, who has to sign it, the time periods it has to cover, because none of that is included in the new rules. All right, they're stepping away from that requirement. That doesn't mean I think you should abandon that practice, and we're going to talk about that. But the standard itself is that whatever records you keep have to show that they have to accurately reflect the work that that employee performed. All right, and again, that's a general shift under the new rules. When COFAR came out and said one of the reasons they're proposing Part 200, it was generally to allow greater flexibility in meeting your program objectives. Now, when we talk, when you guys talk about procurement and when you talk about equipment and things like that, you're going to see they missed the mark by a wide margin on giving you more flexibility. All right, but time and effort is actually one of the few areas where they did give you a lot of flexibility. All right, you are free to decide how you want to try to meet these new standards. Okay, don't get your hopes up yet. I'm going to disappoint you in probably about 20 minutes. All right, the forms still have to demonstrate allocability. All right, under the federal rules, and if employees paid with federal funds, they have to show that they worked on that particular program and cost objective. So allocability is still a requirement. All right, but that's a requirement for all costs, not just time and effort. So it's not included in the time and effort section of the rules, but it is still a requirement. So make sure if you're paying them from this particular HHS grant under this cost objective that the work they did actually benefited that program. All right, who do you have to maintain these documents for? Any employee whose salary is paid in whole or in part with federal funds, or if they're paid with non-federal funds, but you're using their salary for a match or cost sharing for some other federal program, you would also keep time and effort documentation. All right, when I say paid in whole or in part, I mean that. If they're paid 10% from federal funds and 90% from other sources, you still have to maintain time and effort documentation unless you want to pay back that 10% to the federal program. All right, but this only applies to employees of your non-federal entity, not contractors. If you contract out for services and they're not an employee, they're an independent contractor, you're not exerting control over what they're doing. The services they're providing are helping you carry out the grant, but they themselves are not carrying out the grant. They're a subcontractor. They don't have to keep time and effort documentation. For them, you just have to make sure you went through the proper procurement procedures to get their services, but you don't have to keep time and effort docs. All right, I provided you a chart here. It's about as common sense as you can get. You ask yourself, is this person an employee? If they are, were they paid with federal funds? If they were, time and effort's required. If they're an employee but weren't paid with federal funds but used them for match, time and effort's required. My favorite is this last category over here. Is he or she an employee? I don't know. Don't admit that to an auditor. Talk to somebody else. All right, if you're not sure, ask HR, find out, and then we're going to have a long conversation about your internal controls and making sure that all costs are necessary and reasonable and that there is somebody there to make sure that, yes, this is an employee. Again, yes, that was, you got a little bit of a chuckle out of you guys, but that wasn't included to get a laugh. That was included because we've run across that before. Part of the work my firm does is we will come on site with a client and we'll pretend to be an auditor or a federal program monitor. And we'll review your fiscal policies. All right, we'll look at your time and effort. And that was an issue. We're like, they had this person that they weren't keeping documentation for, and we're like, okay, well, are they an employee? Well, I don't know. It's like, well, I'm glad you're telling me this and not the auditor when they're here, so let's work this out. It turns out they were an employee. They were just working in an office that particular staffer had no idea of what was going on over there, which, again, can be a problem in and of itself. But so long as you go through this process and you figure out who's an employee, are they being paid with federal funds, then you got to keep the records. All right, so that's standard. That the documentation has to reflect the work, accurately reflect the work performed. This is how you meet those standards. Your records have to be supported by a system of internal controls that provide reasonable assurances that charges are accurate, allowable, and properly allocated. Okay? How that works at your non-federal entity is really up to your non-federal entity. All right, you have to decide, okay, what internal controls do we have in place to A, make sure that this is an employee that's paid with federal funds, that they're only being paid for the funds or for the work that they did, and that some sort of review is taking place. Whether it's a reconciliation done at the end of a period where we're looking at what they were budgeted versus what they did, whether a supervisor is signing off, what protections do you have in place to make sure they're only being paid for the work that was done? Okay, I mean, there's no federal standard that they've put out for what exactly you have to do to meet that. But we will talk a little bit later about their definitions of internal controls, and I'll give you a general idea of what they're looking for. It has to be incorporated in your official records. Again, that's going to vary depending on your non-federal entity. You know, but somewhere in your, I need to be able to come in, and when I look through your files, I should be able to see, okay, this is who was paid, this is how much they were paid, this is the period that they were paid over. You don't have to have I'm not saying I need a physical copy in front of me. All right, under the new federal rules, you can keep all your documentation electronically. All right, the rules say that that's perfectly acceptable. You just have to make sure there are safeguards in place that only the people that should be looking at the documentation can, and that only somebody with the authority to alter documents can do so, meaning they're password protected, things like that. One of my favorite parts of the rule is they have to remain readable. All right, it's not that your PDF is going to fade over time, but as technology changes, you have to update yours accordingly. The example that was used at a conference, it was somebody out in the audience that came up with this idea. If you were keeping records on floppy disk, that's obviously not going to work anymore. All right, that's a great example. I wish I would have come up with it. I'm not quite old enough to remember floppies that well, though. That's right, I said it. It's more fun to say that when my boss is here, because then he gets really mad. It has to reasonably reflect the total activity for which you're compensated. This is what we talked about earlier. Get as close to 100. Now, the reason that's the standard they give, reasonably reflect, is because they want you to get as close to 100% as possible, but they understand you may not be able to get to exactly 100%. All right, if an employee spends 0.5% of their time on a particular activity, it might be hard to track that. They understand that, so they want you to get as close to 100% as possible. And you go back to use that prudent person standard for allowability. Would a prudent person believe that this is a reasonable approximation of the time that they've spent? Okay, now as we're going to talk about, if your records meet the requirements, you don't have to provide any additional materials like time cards, things like that. But having those handy to help support whatever percentage you've come up with would still be helpful for you if it is questioned in an audit. All right, the documentation has to encompass all activities, both federal and non-federal. Again, even if it's 10% federal, 90% everything else, you have to make sure all 100% of that is included on the form. It has to comply with all established accounting policies and practices, and you have to support distribution among specific activities or cost objectives. So that requirement carried over from the old circulars. All right, whatever the cost objective is, make sure that is clearly noted on whatever documentation you're keeping. All right, I mentioned this a little bit earlier. COFAR, so when they released these rules, the draft rules, it was in February of 2013. All right, the inspector, I believe the proper way to say it is the inspectors general from the various federal agencies got together and offered comments that summer. And one of the areas they were most upset with were the direction they were going on time and effort. All right, as far as the IGs were concerned, they wanted everybody to keep doing PARs. It was the easiest way for auditors to track what you're doing to make sure you're doing everything right. They didn't want this additional flexibility. So this is how COFAR responded. By focusing more on your internal controls, the rule mitigates the risk that the non-federal entity is going to focus on the prescribed procedures, dotting the I's, crossing the T's, which alone by themselves may be ineffective in assuring full accountability. The goal is uncovering weaknesses, not generating audit findings. Right? There were a lot of areas where, when the rules were originally proposed in 2013, OIG and a lot of other federal agencies commented, and OMB and COFAR did back away a little bit. On audits, they were originally going to raise the audit threshold up to $1 million. Instead of, it was at 500,000. OIG was really unhappy with that. They compromised and they cut it in half. They raised it to 750,000. All right, a lot of other areas, they caved. This is the one area where they told OIG they could go take a walk. All right, this was how they wanted to set it out. This was the flexibility they were going to offer. Here's the problem. OMB and COFAR are not the people that are going to be doing your audits. All right, so what they wanted and what the auditors might do is might be a little different. We're going to talk about that. But this is the reasoning behind what they're trying to do. All right, I give you the exact definition of a cost objective. It's a program, function, activity, award, or organizational subdivision, contract, or work unit for which cost data are desired and for which provision is made to accumulate and measure cost of processes, products, jobs, capital projects, etc. All right, so like I said, right there, it's anything for which cost data are desired. If you have to track the funding separately, a set-aside, administrative set-aside, a cap on certain areas of funding, that's its own cost objective, and that's what has to be included on your time and effort documentation. All right, now that can be more than one federal award. Like you can have certain cost objectives that, I mean, the definition that they give you here is generally if it comes from two different federal awards, it's going to be two different cost objectives. But we're going to talk about blended funding where that might actually get combined. Where if the work could be fully supported by either, you could count it as a single cost objective. All right, but generally, more than one federal award, it's going to be different cost objectives. A federal award and a non-federal award would generally be different cost objectives. Indirect cost versus direct cost. My favorite one is the bottom one, which is an unallowable activity and a direct or indirect activity. Well, yeah, those are going to be different, but then we're going to have another discussion on the unallowable activity. All right, whatever you're charging, again, going back to allocability. A cost has to be allocable to a particular federal award and cannot be charged to other federal awards to overcome fund deficiencies. So let's say somebody's working on two different federal awards. They're doing 60% on award A, 40% on award B. But you have more money in award B, so you're just going to pay more of their salary out of that. No, not allowed. Allocability says it has to be based on the benefit the program received. So 40% of their time was on program B can only pay 40% of their salary. Okay? Now, when we talk about blended funding in a minute, there's some flexibility there, but again, you got to be careful. Oh, sorry, going back to that last part. That doesn't preclude you. Let's say you are working on an activity that can be fully supported by either. All right? If you want to then, you can generally count that as a single cost objective, and you can decide exactly where those funds are going to come from. If you want to pay them 70% out of B and 30% out of A, but their work could be fully supported by either, that's generally allowed. Just make sure that if you're doing that, someone has made that determination, that their salary could be fully covered under either of these programs. The work they're doing could fully benefits either of these programs. All right. Now, 9 times out of 10, that's going to be a state objective you're working on and a federal objective that might coincide. For a lot of different federal programs, it's going to be a little bit more rare that you're going to be able to fully support from 2 different federal programs. All right. If the cost benefits 2 or more projects in a way that can be determined without undue effect or cost, that's how you break it out, 60% here, 40% here. They do recognize that there are some activities that are going to be really hard to draw that out. All right, now there's some flexibility for institutions of higher education that doesn't carry over to others, but what they have said for all grantees is that if the cost benefits 2 or more activities and you can't determine exactly 60% here, 40% here because it's too interconnected, then they do give you the flexibility that you can allocate it out on what they refer to as a reasonable documented basis. All right, going back to that prudent person standard. Would a prudent person in your situation believe that, okay, I can't give you an example of exactly 60-40. I don't have that. But based on our review, we think it could be 50-50. Okay, and I'm giving you these general examples because it really is going to depend on the work that that employee is doing. But somebody with the authority to do so has to look at that employee's time and say that, look, I can't break it down the way we can with everybody else, but we think this is a reasonable approximation of how we can divide their time, and we're going to pay them accordingly. Now, under the federal rules, this isn't a new rule, it's just the first time they wrote it down. If you're ever unsure if a cost is going to be allowable, which carries over to this, if you're ever unsure that that is going to be the appropriate way to pay that employee, the appropriate way to track their time, ask the pass-through entity or ask the federal agency. Okay, now, anyone who's ever submitted a request to a federal agency, I can't promise you're going to get a quick response. The joke I've always used is if you have a kid in high school and you ask a question to the federal agency, there's a good chance that your child's going to be a doctor before you get a response. Okay, now that's not always the case. You have some people at the federal agencies that are very good at getting back to you quickly, but a lot of federal agencies move at, other people say they move at a glacial pace. I think that is a giant insult to glaciers. That was a courtesy thing, but thank you. But if you're ever in that position, it's better to get that prior approval than to go ahead and charge that employee's salary the way you've come up with, only to have it disallowed later. All right, so if you're ever not sure, go to the federal awarding agency, or if it's a pass-through, go to the state, go to the pass-through entity, and ask, this is how we want to break down this employee's time, but we're going to pay them accordingly. Would you sign off on that? And if they don't, try to come up with a plan B. See if there's another way you can do it. All right, and really it's better to have that plan B, not just if they say no, but if they don't give you a response at all. All right, better to have a plan B that you know would get approved otherwise. But it is a possibility if you can get that approval. All right, budget estimates alone are not going to qualify as time and effort documentation. All right, you have an approved budget. You know generally how you want to spend that, whose salary you're going to pay, how much you're going to pay them. But that estimate is not good enough because, going back to that first statement of what the new rule is, it's you're paying them for work that was actually performed. Okay, so there has to be some sort of reconciliation. Did you go back and say, okay, this is what they were budgeted, this is what they did, it either lines up perfectly or it doesn't, but you have to pay them for the work that they did. So you could use those budget estimates as a springboard, as a base, all right? But only if they can produce a reasonable approximation. We think this is how much time they're going to spend. If that any significant changes are identified. When you do that reconciliation, you go through and say, okay, they worked this many more hours more than we thought they would. We're going to have to pay them this much more. And then go back through and make that change in those budget estimates. And then finally, that you have internal controls in place to make sure there's an after-the-fact reconciliation. Once the period is over, somebody has gone back, compared the two, and now we have this one set of documents that says this is the work they actually did. So you could start off with budget estimates, but that can't be the end result. All right, in the off chance that somebody actually did do exactly what they were budgeted, you still need to have an after-the-fact signature or some sort of certification to say, yes, they did exactly what was budgeted, exactly what we thought they did, but we did go back and do a review just to make sure. All right, that's what auditors are going to be looking for, that somebody did an after-the-fact review. All right, so all necessary adjustments. All right, if you had them budgeted out at 60-40 and they did 70-30, some sort of reconciliation was done. And it was only done by somebody with the authority to do so. A supervisor, the head of your organization, whoever handles your personnel issues, whoever it is at your non-federal entity that's going to handle that, make sure that they have gone through and done that review and updated all documentation accordingly. All right, again, just like under the old rules, because practices are going to vary, your records can reflect categories as a percentage, 60-40. You don't have to say he spent 12 hours on this, 8 hours on that, and so on. You can break it down by percentages, 60-40, 50-50, or, multiple, like, 60-20-20. Whatever it is, you can use percentages to break it down on your forms. Okay, this is where it gets a little interesting. Under the new rules, cognizant agencies for indirect costs, so generally it's going to be HHS, are encouraged to accept alternative proposals based on outcomes and milestones for program performance. But you have to be able to easily document those outcomes and milestones. So what they're saying is you're coming up with a plan that says, we're going to do XYZ by a certain date, and to do so, we're going to have to pay our employees out accordingly. You come up with a plan, and for each milestone, that dictates how much an employee would have paid to get you to that milestone. All right, that would be considered an alternative proposal because it's separate from the rules we just talked about. You're not necessarily going through the normal, okay, we're going, we look at this month-long period or this 2-month-long period. We go back and look at what they did. We pay them accordingly. This one, you're doing a lot of the work up front. All right, so when I said budget estimates aren't allowed by themselves, that's part of the rule. But if you come up with this system that when you meet certain benchmarks, that's going to dictate how much like an employee would be paid. You can do that if it's approved by the cognizant agency for indirect costs. So if HHS signs off on it, you can do this alternative proposal. Based on the conversations we've had and guidance that we've seen from the federal agencies, it's very rare that they're going to allow this. All right, OMB was encouraging them to accept these alternative proposals. It's not required. It's really at the discretion of the federal agency. But if you could come up with a system where the employees are paid based on these milestones or these outcomes, and you can do it in a way that convinces HHS that you're still going to meet that general standard of you're only really paying them for the work they did, they can sign off on it. But understand, if they do, they're going to be watching you a lot more closely. Because even if they sign off on it, they're going to be a little bit more worried about how you're tracking that time. And they're going to go through and they're going to, they might require periodic reviews. They might require you to submit documentation to them on a certain, like every quarter, every month, something like that, beyond what they might require under a normal situation. So it is an option, it is a possible flexibility, but be very careful if you're going to go down that direction. All right, if the records you have meet all of the standards we just talked about, okay, and they accurately reflect the work that's performed, the non-federal entity cannot be required to provide additional support or documentation. Okay? When I say cannot be required, it means the feds can't require you. If the state wants you to be a bit more specific about certain things, that's within the state's discretion. All right, but the feds cannot require you to provide additional support. All right. Having said that, there are certain DOL rules you still have to follow. Under the Fair Labor Standards Act, you still have to support all salary, payments made for salaries or hours worked with something along the lines of time cards, showing the amount of hours they worked each day. All right, that's a DOL rule. You can't get by that. But for the purposes of meeting your time and effort requirements, you don't have to provide those to the auditor. You just give them your time and effort documentation, and that's what they look at. But I said earlier, even though you're not required to keep time cards and things like that for that purposes, I'd always have them handy. That way, if an auditor does question how you paid a certain employee, you have this additional evidence to back it up. And the reason that that's really important is because the rule states for a non-federal entity that have records that don't meet these standards. So it's been determined that whatever system you've come up with has not met the minimum standards of Section 430. HHS can require you to keep a PAR, and the language they use is including prescribed certifications or equivalent documentation. But they don't define what a PAR is. Under 122, a PAR was very clearly defined. After the fact, signed by the employee, and so on. None of that is included in Part 200, which means it is at HHS's discretion exactly what would be required in that PAR. All right, now, we've already seen through the comments from OIG and the other agencies, they didn't like the direction OMB was going. So because of that, this paragraph in the rules worries me. That's when I made the comment earlier today that they're giving you just enough rope to hang yourself. This is exactly what I'm referring to. If you come up with a new system, like everyone generally right now should be using PARs. If you come up with a new system that you think meets these requirements but are not quite as burdensome as keeping the monthly PAR or if it's every 2 weeks, however it is you're doing it, that's fine. That's great. That's what OMB wanted you to do. But that doesn't mean HHS or the auditors are going to accept that. All right. Auditors have been trained for years for exactly what they're looking for and how they're, pretty much how they're going to end up getting you to owe money back to the federal government. All right. It's not like they just woke up the day after these rules took effect and were like, oh, let's just change everything we've ever done. All right. This is going to be a process. And under the old rules, under A122, I gave you multiple examples of findings and areas of noncompliance where money had to be repaid. I don't have that under the new rules. We don't have those audits. We don't have any litigation that I can point to say exactly how it's going to work. All right, so this puts the ball in the Fed's court. So if HHS decides, no, what you've come up with, even though you think it's okay, does not meet what we believe the definition of an allowable system under Section 430 is, in that case, you're going to have to keep a PAR, and we determine what's on that PAR. If we want you to keep it every 2 weeks, you're going to keep it every 2 weeks. If we want you to keep it weekly, you're going to do it weekly. All right, there's a ridiculous amount of discretion given to the feds if they make that decision. Now, the guidance documents that have been put out and statements that have been made, no agency, not ED, HHS, DOL, nobody has said that this is what they're going to do. All right, but it is within their discretion and within their authority to do so. Okay, so just as you move forward, be very careful. Work with your pass-through entity. Work with the state. Figure out, okay, this is what we want to do. Would you sign off on it? Because then if there's anything the state or the pass-through entity is not sure about, they can go directly to the feds. All right, you can always go directly to the feds, but I generally, if you get funds through a pass-through, it's better to work with them just to make sure they're aware of what's going on. All right, part of the rules is it has to be incorporated into your internal controls. in a way to show that the cost that the money that you're paying to your employees is accurate, it's allowable, and it's allocated properly. So when they say internal controls, what do they mean? Now, the citation I've given here is to the old Edgar for when the program was still under Ed, but the definition is still the exact same. And you can find it in section 302 of the UGG. You have to maintain effective control and accountability for all funds, all property, and any other assets. You have to adequately safeguard all of those assets, and you have to use assets solely for the authorized purpose. Now, how does that translate to your time and effort? Again, going back to you're only paying employees from the programs that benefited from the work that they did. Now, I've said that probably 6 or 7 times by now, but what I'm trying to point out is that there has to be some sort of framework at your non-federal entity to ensure that that's exactly what you're doing. All right? That there's somebody reviewing your records, making sure they're compliant with the federal rules. That whether it's HR, whether it's a supervisor, whoever it is, that there's some sort of review that's done, some sort of after-the-fact monitoring, self-monitoring of your own non-federal entity. We're going through, we're making sure that all records are accurate and that employees are only paid from the proper program and for the work that they did benefiting that particular program. And the definition they give of internal controls is a process implemented by your non-federal entity designed to provide reasonable assurance regarding the achievement of objectives in the following categories: your effectiveness and efficiency of operations, reliability of reporting, and compliance with applicable laws and regulations. All right, for time and effort documentation, we're kind of looking at that reliability of reporting. If I'm an auditor and I come in, am I going to see anything in your time and effort records that is going to raise a red flag? Is there anything that I'm going to have to ask more questions about? Or have you clearly met the federal requirements? Now, some of that's going to depend on the auditor you get. A lot of clients that we've dealt with in the past, we've gone in, tell them they're doing something wrong. And a lot of times, with their time and effort documentation, we've made a comment of, based on this, I can't tell if your employee or your supervisor signed it. It's not clearly noted on here. Well, we've never had that come up in an audit before. That's great. The only thing that means is you have a horrible auditor. All right, so that was the most common complaint we'd always get is, well, this has never been an issue before. No, it's always been an issue. Your auditor just hasn't caught it yet. And because they haven't caught it yet, doesn't mean they're not going to catch it in the future. And what happens if you get a new auditor? Okay, so just make sure that you're doing a review to say, okay, to the best of our ability, we believe a reasonable, prudent person believe these records are compliant, that we have the appropriate safeguards in place to make sure the records are being reviewed, and that charges for salaries are based on work that was actually done. If you have that in place, you shouldn't have any question costs on your salaries. Now, they've given you a couple of documents, and I believe somebody else later today or tomorrow is going to be talking to you about internal controls. They're going to go into more detail. But they give you 2 examples of the kind of internal controls they're looking for, and you can find them in these 2 documents down here at the bottom. It's the U.S. Comptroller General's Standard for Internal Control Integrated Framework, and then what's known as the COSO report. It's the Internal Control Integrated Framework by the Committee of Sponsoring Organizations of the Treadway Commission. Because, my God, people in Washington love to have their long, complicated titles and acronyms. But if you go through these documents, they'll walk you through the kind of internal controls you're looking for. Right? And really what it boils down to is, again, appropriate safeguards to make sure you're protecting federal funds. Now, not just from fraud, not just making sure you're only working with contractors that are allowable or that have the capacity to serve you, not just going through the procurement, but with your time and effort, when you're paying your salaries to your federal or to your employees working on federal programs. All right, are there appropriate protections in place? Have you gone through the rules? One of the big things they look for when they look at these protections, policies and procedures. All right, if you have a policy manual walking through exactly how employees are supposed to track their time, what those records are going to look like, and exactly what review is done, I mean, an auditor will love you. That might be overpromising just a little bit. But the auditor will definitely appreciate that more than if you don't have a policy manual. All right, 2 reasons policy manuals are helpful. It's something you can hand to an auditor to look at, and it's a fantastic training tool. All right, a lot of subrecipients and grantees have a high turnover with employees. All right, so the best way to train an employee is to give them a manual and have them look at it. Now, again, I keep saying give them a manual. It can be electronic. For years now, generally people have been doing paper copies, and one of the worst instances I ever came across, we were up in, and I'm not naming anybody specifically, but we were up in the state of Vermont, and we asked for their policies and procedures on procurement. And they're like, sure, no problem. They picked out a document, and when he dropped it on the table, you could see the dust fly up. And it's like, okay, has anybody read this since my grandfather was born? Like, it's just one of those where they have a procedure, so they think they're fine. They have a policy manual, thinking it's okay, but they're not using it. And the danger there is, again, if you're not following your own policies, that's an audit finding. So when we finally reviewed what they were doing everything properly. But they had a couple of extra steps in their own policies they didn't need to follow, and they weren't following. And we're like, that's fine. You shouldn't have a policy manual that says this is what you have to do. You have to update your policies. Make sure that it's reflecting what you at your non-federal entity have in place to make sure you're doing this correctly. Okay, now, hopefully, again, electronic versions, there's not going to be any dust flying up. But if I'm an auditor and I come in and like, let's say I know you're charging sick leave to the federal awards, under the federal rules to do that, it has to be in accordance with your written policies. And I said, okay, where's your policy on how you're charging fringe benefits or sick leave? And if you stare back at me with a blank stare, having no idea what I'm talking about, that's a problem. All right, that's if I'm an auditor and I've come in and asked that question. Okay, now, if you're the employee at your non-federal entity that handles that specifically, and you know exactly what the policy is and you know everything's okay, that's fine. Do other employees at your non-federal entity, do they know your sick leave policies? Do they know what your policies and procedures say about how they're tracking their time? Because if an auditor comes in, they're going to be asking similar questions to multiple people. And if they start getting conflicting answers, or if they notice some people don't have those answers, and they know for a fact that person's paid with federal funds, that's a problem. All right, now that's not the kind of finding that's going to lead to any repayment of funds, most likely, but that's the kind of finding that will require corrective action. You're going to have to start doing additional training of your employees, things like that. So it's better to head this stuff off at the pass. Make sure everyone at your non-federal entity is aware of what your time and effort policies are, that they know how they have to track all their time, that they know that either they have to sign off on the document or somebody else has to. Whatever your process is, everyone should be familiar, especially everybody paid with federal funds, should be familiar with what that policy is. That way, if they're ever asked a question, they can answer intelligently. All right, and then just internal controls in general, you have to comply with all federal statutes and regs. You have to evaluate and monitor the non-federal entity's compliance with statutes. Again, that's you doing self-monitoring, self-evaluation. Now, the pass-through entity is always going to have to monitor what you're doing. There's always going to, and that doesn't necessarily mean they're coming in and doing it on site. It could be a desk monitoring. There's a whole number of ways they can monitor what you're doing. But you need to be monitoring your own internal procedures. That's a strong internal control, self-monitoring. All right, is somebody doing a periodic review to say not only that the records are being filled out correctly, but if you have an officer or employee who's required to check that, is somebody checking that they're doing that? All right, is somebody making sure that whoever it is that has to go do that reconciliation, are you doing the check to make sure they have done the reconciliation? All right, that's self-evaluation. All right, if you come across an area where you know they're not doing it, or you know people are filling things out wrong, are you taking prompt corrective action? Are you fixing the problem? Because if you discover the problem and you fix it before the auditor comes in, it's a lot of headaches that gets avoided down the road. And then this is especially when you're dealing with employees and how they're paid. Make sure you're also protecting all personally identifiable information. All right, if I don't work at your non-federal entity, if I just walk in, I shouldn't be able to access a document that gives me name, social security, address, things like that. All right, now there are protections under HIPAA and FERPA for healthcare record protections, student record protections. This is specifically dealing with you and your staff, making sure that you're protecting the personally identifiable information of your staff. All right, so again, that goes back to having those safeguards. If it's an electronic system, then not anybody can log in. If you're still keeping everything on hard copy, that's fine. A little environmentally unfriendly, but still fine. But make sure that, I can't just walk into a room, open a file cabinet, and look at any file I want or write on any file I want if I don't have the authority to do so. All right, always have those safeguards in place. All right, so what does that mean for right now? We talked about what the new rules are, how they relate to the old rules, much less regimented. You don't have to necessarily have a specific person sign off on it. You don't have to necessarily keep it monthly. You can do it quarterly. I mean, under the rules, you can do it annually, but then that's going to bring up questions of strong internal controls. Can you really go back and just do one reconciliation a year? All right, we normally recommend you do them at least quarterly or at least semi-annually. We would recommend don't go more than 6 months without doing that reconciliation. The more frequently you do that reconciliation, the happier your auditor will be. And generally, the more covered you'll be against any findings that might pop up later on. But if you've heard these rules and you've decided, okay, there's some significant changes I want to make to my system. I think the PARs are too burdensome. I don't think it's in our best interest to keep doing this. That's fine. That's what the rule says you can do. But I said, if HHS determines whatever system you come up with is not appropriate, is not allowable, or doesn't meet all the requirements, they're going to determine exactly what your time and effort system will look like from then on. All right? I think we can all agree nobody wants that. All right? Now, under the old rules, I had, there were cases that we worked on personally. There were documents that came out from the different agencies. I don't have any of that right now. I don't know how the auditors are going to treat this, because this is really the first full year in which auditors are going to be looking at your policies and procedures and how you do things based solely on the new rules under Part 200, with the exception of procurement. Because of that, I don't have audit findings I can point to. I don't have audit resolution cases that I can look at. I can't intelligently tell you exactly what kind of system you could come up with that will be compliant. What I can say is that if you were keeping PARs right now that are compliant with A122 or A87, whatever your non-federal entity fits under, make sure that if you are compliant with that, I can almost guarantee you will be compliant under the new rules. Okay, now when we ask somebody at OMB that question, their exact responses will not necessarily. And they even clarified. The reason they said that is they want you to go back and review your system. They don't want you to just assume we're compliant, we're fine, we don't have to worry about anything. Go back, look at how you're doing things, figure out if this was compliant under the old system. If it was, then it's certainly going to be compliant under the new system, because the new system doesn't require you to have it signed by an employee or supervisor with first-hand knowledge, doesn't require you to keep it monthly, doesn't require you to do after the fact or have that certification statement. So if you do, those are stronger internal controls than what are necessarily required. All right, that will generally be acceptable. I can't imagine an auditor questioning that. All right, so what I would do, wait, I'd say a minimum of 2 years, but I mean, you could go even farther than that. Wait till we get audit findings. Wait till this has actually been played out either at the federal agency or in the Office of Administrative Law Judges within the federal agency, till we have rulings to show that, okay, this is what's expected. This is what the agency is looking for. To be honest, the feds might not be 100% sure how they're going to treat it. All right, if you look at a lot of the guidance documents that have been put out from the different federal agencies, it hasn't been particularly clear with what they're expecting here. They'll mention the rule, really just restate what the rule is and move on to the next question. And it's because I don't think they really have a plan moving forward. They're going to wait to see what some of these new systems look like, and that's going to determine how they're going to react. That's going to determine what they'll accept and what they won't accept. All right, and then OMB is likely going to get involved again. If they feel the federal agencies aren't adhering to the spirit of the new rule, we could see additional rules clarifying exactly what should be allowed or what the feds can and can't do. But as of right now, we don't know. So I recommend keep going with your PARs, keep making sure they're signed by the appropriate people, keep including the certification statements. All right, now I believe in your, here it is. I think in the materials you received, everybody should have received a copy of a sample PAR. Okay, so if everybody looks at that, this form must reflect each employee's actual, I'm sorry, maybe I'll give everybody a second to actually pull that out. All right. Now, there isn't a single PAR out there that you can hand me that I could sign off and say 100% this is going to be okay, because it's going to depend on your auditor. What I can do is look at a PAR and tell you this appears to me to meet the requirements, and you should be good if you're using something similar. So the form must reflect each employee's actual activity per funding source and account for the employee's total activity during the pay period. They have a spot for the employee's name. They have the pay period it covers. Underneath that, you'll see the different cost objectives. Okay, so on the left side, you have your different cost objectives, included administrative, or they have different codes for absent. So if you're on the paid time off, vacation, jury duty, family death, unpaid, family medical. So it covers those fringe benefits, the leave. It covers administrative costs, and then has the different cost objectives listed down the side. Now, this is for a 2-week period, has you filling out specifically. Now, the federal requirements don't require you to go that detailed. But again, if you have that information and you feel it can only make your documentation stronger, we certainly encourage you to include that. But you're only required at this point, or at least under the old rules, to do monthly. But if you're doing it every 2 weeks, that's okay too. Some auditors might actually consider that a stronger internal control. And then at the bottom, I certify that this report is an accurate representation of the activities or effort expended during this pay period, and that I have full knowledge of those activities. And then it very clearly has a spot for your employee signature, or approved by, where you then put the supervisor signature. All right. So a lot of the findings we talked about earlier are already, they're already taken care of here. It clearly states who the employee is or who the supervisor is. You have the certification statement. You have the cost objectives. All right. The only way you can really mess this up is, let's say it goes again. Let's say it goes through the end of this week, which I believe, so Friday's the 27th. All right, if you sign it, okay, and you've signed it on, now there's no spot for the date here. I might encourage you maybe put the date of signature on here. That would make it a little bit stronger. Because if they see that you signed it before the end of the period, that's a problem. That's an audit finding. If there is no date, that's not necessarily out of compliance, but they're going to ask the question. They're going to say, okay, I see that somebody signed this. How do I know they signed it after the fact? All right. Now you could, that's an easy way, that's an easy issue to deal with. All right. You could simply have the employee sign an affidavit that I signed to this form on this date, and you're fine. All right. But if you put the date on here, it might go a little bit easier for you. All right. But if you meet all those requirements and you're doing it after the fact, so they're signing it after the end of the period that it covers, you're going to be compliant under A122, which means you're going to be compliant under the new rules in Part 200. All right, so I would definitely encourage everybody to take a look at this. I mean, I'm not saying it has to look exactly like this, but go back and look at your own forms, see what you're using, see if it matches up, and then decide, what changes, if any, need to be made moving forward. All right, I want to back up a little bit and talk about under alternative proposals. I gave you the citation for that, which was in section 430, paragraph I, subparagraph 6. But if you go one more paragraph down to paragraph 7, they refer to blended funding. All right, now under blended funding, they allow that a grantee can establish a single cost accounting code if they are working with multiple grants or multiple programs that do essentially the same thing. All right, this went back to what we were talking about earlier, that if you are working on a program or multiple programs where the work could be fully supported by either, what the federal rules are now allowing is what's referred to as blended funding. You can simply take program A, program B, put them into a single pot of funds, and that's now your program or your cost objective. All right, but it has to be work that can be fully supported by either. An example that they give is if you have, let's say, 4 programs, and 3 of them can all be considered, all the work could be fully supported by either of those 3, you can't then blend all 4 and pay an employee from that pot of 4. You can only pay them from the pot of the 3 that you've blended together because of the similarity between the programs. If you're ever going to do that, do not do it without getting prior approval from the pass-through or the feds. All right? So it's when you get more funds from more than one program, or it could even be more than one agency. If it's an HHS and an ED grant, or an HHS and a labor grant, but they're doing essentially the same things. Now, if you ever listen to Congress go on about stuff, one thing they'll talk about is program duplication. You have a lot of federal programs, some of which do the exact same things. This is kind of what they're talking about. If you're still dealing with a program where you're doing providing essentially the same services, you're doing essentially the same activities, you could theoretically combine them. But only if you're conducting the same or closely related activities, you can then count it under a single cost code. All right. The example I use in education, what we have for K-12, it's called school-wide programs. It's the same deal. They're combining all of their funds into one pot, and therefore they're only tracking that single, like the school-wide program is its own cost objective. All right, now I don't know exactly what federal programs all of your non-federal entities might be participating in. Some of you might just have the one from HHS, some of you might have more. All right, so it's going to have to be a determination with each non-federal entity if this is something you think you could use. Okay, but you have to get prior approval, and if it's an HHS and an ED grant, you have to get approval from both agencies. Okay, anyone who's involved, like whether it's two agencies, if you might possibly getting money from two different pass-throughs, make sure that both pass-throughs have signed off on it. All right, and it can only be for those activities that can be funded by all the or that could be fully funded under the programs. Like I said earlier, if you have 4 programs and only 3 of them could be blended under these rules, that's all you could do. You blend the 3, you still have the other separate program with its own cost objective. This is an allowable use of funds, and when you would do your time and effort documentation, you'd have the single cost objective, that one blended program. Okay. Remember how I said earlier, we don't know exactly how the auditors are going to treat the new flexibility? Well, this is a giant landmine that you could step on. If you've come up with a blended program that you think is perfect, that's great. If you get an auditor that's never dealt with a blended program, that could be a problem. Okay, that doesn't mean you shouldn't do it, but it means you have to make sure. And when I'm saying get approval, I don't mean you were on the phone with somebody from HHS and they said it's okay. That's not worth anything. All right? Under the federal standards of documentation, I need some sort of document in front of me. An email from somebody at HHS might work, but I'd prefer a signed certification. You send a written request to the agency, this is what we want to do, would you sign off on it? They send you a written response back, signed by somebody with the authority to approve it, then you can move forward with that blended funding. All right, just be very careful and make sure you have buy-in from both the pass-through and all the different federal agencies before you get too far down that road. All right, I still have some questions that were asked today that I don't think I got to. Our state requires the PAR for staff be broken down by each activity, and all activities must match the timesheet. What do you suggest for this time documentation? Again, what I said earlier, as long as it's broken down by the cost objective, okay, and again, that example that we just went over, if the cost objective is listed on down the side, and then you fill in the amount of time or the percentage of time right next to it, that meets the minimum requirements. Now, if the state is requiring you to break it down even further, the state has the discretion to be more restrictive. You need to follow whatever the state policy is. When more than one program benefits equally by the work done and it's not possible to separate the time, how do you allocate? We talked about that a little earlier. They want you to break it down by percentages as much as you can, but they understand there's certain activities they can't do it. So they want you to do a reasonable approximation, all right, as close to a perfect breakdown as you can get. And again, if you have a supervisor that signs off on that and says, look, the work that they're doing cannot easily be broken down into these percentages. This is as close as we could get. This is a reasonable approximation of what they've done, and have a supervisor sign off on it. You should meet that requirement. Or again, we go back to that blended. If you have certain programs that are so similar they could fully support the work that's being done, and you've blended the programs, then you just need the one single cost objective under that blended program, and that'd be fine as well. But that has to be approved by the federal agency. Do PARs need to be signed? Do they have to be printed, signed, and filed, or can electronic signatures be used? Under the new rules, there was nothing mentioned of signatures. Right? So under the new rules, no, they don't have to be signed. Should they be signed? Absolutely. It's a strong internal control. It's a way to make sure that that somebody has reviewed it, and therefore we know it's accurate. All right? Without that signature, the auditor's going to ask questions, and you're going to have additional documentation to back it up. But if you have a signature, it should solve some of those problems. Does it have to be a handwritten signature, or can it be electronic? That's really up to you. But if it's going to be an electronic signature, there have to be the appropriate safeguards in place. All right, if I'm not the supervisor that is using that electronic signature, but I have access and I can put that signature on the document, that's a problem. Only the person with the authority to sign it should have the ability to add that electronic signature. And if that's what you're doing, that's fine. Just make sure those safeguards are in place. I'm not a software expert. I can't walk you through exactly what that would entail. But whatever program you're using, make sure that only people that should have the access have the access. And then if that's the case, the electronic signature should be fine. Right? They've already said you don't have to print everything out, and if you don't have a hard copy, there's obviously nothing for you to sign. Do the electronic signature, that's fine. Just make sure the safeguards are in place. Regarding signatures of PARs by employees and supervisors, as the director, I have a very difficult time getting a board member to sign a PAR as well. All other staff have both signature, but I do not. Is this okay? I think we talked about this a little earlier. If you are the highest level employee that has firsthand knowledge of what you're doing, your signature should be sufficient. Just make sure that in your own policies, you don't just have a blanket statement of it has to have the employee and a supervisor. State that it has to have an employee or a supervisor with first-hand knowledge, or if you want to require both, it's fine, but add that caveat that if this certain position there is nobody higher, that their signature is sufficient, and then you're fine. You've met the minimum requirements, you're following your own policies, there shouldn't be an audit finding. What is required on timesheets and PARs is in and out time required. It wasn't required under the old rules, it's not required under the new rules. They allow you to do it by percentages. You could just say 60% here, 40% here. Now, for DOL requirements, you do have to have in and out records, like the hours you worked each day. There have to be some sort of records showing that. But for time and effort purposes, all we need is the percentage breakdown. We're still a little fuzzy on PARs versus timesheets. I think I just referenced that now. The PAR doesn't have to be a timesheet, but there are records that are required under DOL standards that you're going to have to maintain anyway. Should indirect staff also keep log notes along with their timesheets? I think log notes, this is one of those areas where I'm not sure I understand what you mean when you say log notes. It could be we're just using different terms to refer to the same documentation. If you're paid with federal funds, you have to keep time and effort documentation. Now, that documentation might be different between your different non-federal entities. And there is a difference between time and effort documentation and what's known as time and attendance records. Time and attendance records are your timesheets, your in and out, how much you worked that day. That's different from your time and effort, which shows how much work you did for a federal program. Okay, you have to keep the time and effort documentation if you're paid with federal funds. Okay, now whatever these log notes are, that could, yeah. Well,
let me clarify just a minute first, and then we can get to the question. But what we're seeing across the country is that sometimes your state entity is wanting you to add a whole bunch of things to this document because they want it to collect other information. And that other information is what services you deliver. Most of you have a database program that documents the service delivery, and you should be able to make an argument that it does not also need to be in the PAR. It's not required by any of these regulations that we're looking at that the time and effort requirement also tells exactly what you were doing. It's not that kind of a requirement, but there are many states who are trying to turn it into that. They want you to prove that the person did consumer service delivery during this time, and they did record keeping during this time, and they even sometimes want you to break it out by core service. Well, we were doing advocacy today. That's all done by your database typically. That's collected on your database, and it's turned into your 704 report. And I would say that some advocacy statewide needs to happen related to that if your state is doing that, because it really is not required by these regulations at all.
Okay, I think that covers that. I do want to add that if a state does require you to submit additional documentation of some sort, you're going to have to do that regardless. But again, what you said about state advocacy, that makes sense. If you get together and say, hey, this isn't required, this is too much of a burden on us, you can certainly lobby the state to change that requirement.
Yeah. The state does have the right to add additional requirements. He said it, but I wanted to say it again because everybody wants to tell them they can't. Well, no, that's not an option, but you can tell them there's another way and work it through.
Somebody asked to show an example of a PAR so we could better see what needs to be included. We just went over that example, which I think is useful. As far as what the state requires, if the state wants you to keep that, you have to keep that. Whatever records the state wants you to keep, you have to keep. As far as whether that's required by the federal rules, no. I normally try to be vague as, I don't think so. No, that is not required. All right, the rule we just talked about where I said you have to get as close to 100% as you can, bathroom breaks would be kind of that de minimis amount that you don't have to track when you're in the bathroom. from the federal rules. If the state wants you to keep these additional categories and break it down like that, again, in order to be compliant under the federal rules, you have to follow whatever state policies there are. But if the state is claiming that that's to meet the federal requirement, they're not meeting any federal requirement that I'm aware of. All right, so I would certainly say you might want to lobby the state and be like, hey, this wasn't required under the old rules, it's not required under the new rules, and it's it's really burdensome to try to keep that kind of documentation. But in the end, if the state wants you to keep that, that's what you have to do. Now, again, the audit finding won't be that you're not meeting Section 430 requirements. The audit finding will be that you're not following state rules. Okay, now, if you're not following state rules, there may not be a repayment associated with that. The feds may not come to you and say, okay, you're not adding this time that the state has wanted you to add, therefore we're disallowing the whole thing. I find it hard to believe that a federal agency would do that. What they would do is require corrective action and say that if you don't want to end up repaying funds down the road, you have to come into compliance with what the state wants you to do. Okay, and in the meantime, I'd encourage you to lobby the state and say, this isn't required under the federal rules, I don't know why you're making us do this. But the states do have the discretion to always be more restrictive. All right, those were the only questions I had on the forum. We still have about 25 minutes. Oh, question in the back.
This is more of a comment, I guess, for our, that's related to territories and the network plans, the CIL's responsibility in setting up the network plan. In both North Dakota and Minnesota, both CILs have a network plan that is a little different or encompasses the whole state so that all the counties within the states can be served. And what we run up against is an old RSA interpretation where the boundaries of a Part C center can't be changed. I think that really needs to be looked at. And if you look at the history of how most centers started, it was just a group of people getting together and arbitrarily deciding on a service area. In North Dakota, when the transfer from regional offices to Washington happened, they lost all the grants of origination, or Washington had, one of the two. And so consequently, they called the DSU at that time and asked them what the service areas were. For two of the centers in North Dakota, they redefined the service area based on the spill. Our center used a logo, and so they just named off the counties, which left around 5 counties in the middle of the state. That's supposed to go to us, but we now have to go back and forth between Part C funds and state funds and watch how we serve it. So when you were talking about how to get permission on using the funds that have the same effort, and in North Dakota we tried to duplicate and put all the emphasis on the enacting law to duplicate Title VII of the Rehab Act at that time. The same in Minnesota, and so they should all combine. It's only that one opinion that's inhibiting us from doing that. So if you can change that, that would be appreciated. And give, I think, the CILC, the centers, and the DSC the responsibility to really look at their states and figure out what's best for their individual states now that we're 30 years, 20 years past a grant.
Sometimes 40. Yeah. I don't know if you want to comment on that now or another time.
Only that we know there are several issues around service areas that are problematic and we need to sort through and if you can email us the specifics we will see what we can do. Only that we know there are several issues around service areas that are problematic and we need to sort through, and if you can email us the specifics, we will see what we can do.
And I don't know about you, but I'm thrilled to hear that you're willing to look at those specifics. I'm sure there are a lot of states that are affected by that.
Do we have other questions? As I was going to say earlier, before somebody ended up asking one, is when people don't ask more questions, I can only assume I did such a fantastic job of explaining things that really everything was clarified. For you guys, we had a question up here.
Yeah, timesheets and PARs can be on one document.
They can. They don't have to be. So long as it meets the requirements of a PAR, or even if you want to change your system moving forward, if it meets the requirements under Section 430, but it's also a timesheet, that's fine. Just so long, the difference there is, I don't know exactly how you do your timesheets, but there needs to be some sort of example or some sort of, like, we usually say a signed certification is best, but if someone can add a signature saying, I have reviewed this, and based on either the fact that it was me doing the time or I'm a supervisor with firsthand knowledge, I can certify that this is accurate and reflects the work that was actually performed. So long as you include some kind of language along there on the timesheet itself would be fine. Again, so long as you're meeting those other requirements. There's nothing that says you can't have one thing be both. It's just most non-federal entities have these timesheets, which include so much more information than is necessary for a PAR, that they then keep the PARs separately. But it's really at your discretion. Or if the state determines you can't do that, then the state has the discretion to say that. But if you have no directive, you can certainly use one form as both, so long as they meet the requirements. That was a very complicated way of saying yes, that was okay. But I'm a lawyer. We don't say anything, and we don't say anything clearly unless we can can't avoid it.
Hi, can you explain the new food rules? Never mind.
I can, but if somebody else is doing it later, that's up to you guys.
Let's hear what you have to say about
it. Okay, so the new food rules. In the UGG, what they've said regarding food is really in relation to conferences. If you're hosting a conference And in order to be considered an actual conference, you have to be disseminating technical information beyond your non-federal entity. If you are a conference, the federal rules say you can use federal funds to pay for food at that conference, as long as it's in accordance with the statute, regulations, and other award terms. Now, a lot of federal agencies, they're getting you on that other award terms area. A lot of federal agencies are saying, we don't want you spending federal funds on food unless, and they give you like 6 or 7 hurdles you have to jump over. Now, that's the only food rules I'm familiar with. Was there something more specific you were asking, or was it about the conferences?
It doesn't seem to be consistently applied, at least where I live.
Oh, it's not. So the problem is OMB has said, yes, it's allowable, but other federal agencies over the past, I'd say 5 or 6 years, had been moving in the direction of making it unallowable. So what OMB said is, no, we believe it's an allowable cost so long as the grant award terms don't list it as unallowable. And a lot of individual awards are listing it as unallowable.
We recommend that you put it in your budget, explain it, and get prior approval. So there may be times when that entertainment is what the non-allowable cost is, and food falls under that entertainment category, right? It still does. But there are some things that you might be doing that are not entertainment or conferences, but are instead independent living skills training or some other piece that you can justify. You're welcome to, get prior approval from your person on what your specific purpose is.
And there are certain programs that require community buy-in or community participation in certain things, and the feds understand that a lot of times if you don't give them food, they're not going to show up. Most of those programs make some sort of allowance, but not all of them. You got to go back, look at your grant award terms. Or, like she said, if include it in your budget, or ask the state, or go to the federal agency and say, this is how we want to spend it, this is why we think spending it on food is necessary, and give them the opportunity to weigh in, and they'll say yes or no. Hopefully.
Hi, this is Daryl from ILRU. I just wanted to let you guys know why we do lunches at our events. We actually took this question to the Rehabilitation Services Administration several years ago because there was this clarification and interpretation of the old rule at the time. And we explained, we justified, we wrote up quite a justification for why we need to provide at least lunches. We understood that we probably couldn't continue to justify breakfast and breaks, but lunch is a critical time of the day for us. And when you have an event where there are usually a large number of people with significant disabilities that you are trying to move in and out of a lunch period, to not have food readily accessible during the lunchtime has a significant impact on your event. So they gave us a special dispensation to continue providing food at lunch if we provide a program that is related to the content. So that's what we have continued to do.
So, and building off of that, so when RSA was, when the whole grant was run through Ed is the one who started putting, when I say Ed, I mean the U.S. Department of Education. In D.C., that's what everybody said. I didn't learn until I think I was up in Alaska, and somebody asked me who the hell Ed was, and why was he doing all this stuff that nobody liked, and I'm like, I'm sorry, that's not, okay. But Ed started publishing rules within the last couple of years, saying almost exactly what you just said, that if you wanted to use federal funds for food, it had to be a working lunch. It had to be, then, if it was a working lunch, you had to show that it was necessary by showing that it was on a substantive topic. Like, you couldn't just bring in a motivational speaker, or you couldn't just talk about where next year's meeting was going to take place. It had to be a substantive topic. You had to show that you needed everybody there. You didn't have enough time to let people go out and get their own food, or, again, if you had a significant number of people with disabilities, to show that it'd be too difficult for that many people to go out and get food in the amount of time we've allotted, and we can't give them any more time because we need them here at whatever this event or meeting is. All right, but if you could show all of that, and then show that you paid a reasonable price, and that you did your due diligence to see if there were any other options, then they would let you use the funds to pay for food. Now that's what Ed was doing. I haven't seen anything specifically out of HHS, but it's been my general understanding that that was the direction most of the agencies were going. But again, like was said, if you can show that, we need people here, we can't, because of that, we have to feed them. We can't give them enough time to go out and get food themselves. It is necessary for the purpose of the program. Then generally you could show that, and a federal agency might be willing to sign off on it. But I can't give you a blanket statement that they'll allow it moving forward. Any other questions? Okay, over here. They're coming.
So I'm an independent contractor. I do bookkeeping and accounting for small businesses and nonprofits. And a client sent me to this conference because there's just a lot of questions I can't answer. One of them is the executive director is sending her board members to a conference, and they were requesting and essentially saying that she was legally obligated to provide a 90-day per diem per board member. That's what I said.
Legally obligated by who?
I don't know.
So under
whoever wanted the 90-day per diem, I suppose.
Under the federal travel rules, you can do a per diem, you can do an actual, you can do a cost reimbursement basis or a cash basis.
That's what she was saying.
Whatever you choose, that's the standard you're held to. Okay. So that's one of the areas when I talked earlier that there are certain places where everyone has to have written policies and procedures. Travel is now one of those areas. Because if you don't have written travel policies, you're going to be held to they're known as the GSA standards, which is what the federal government employees, and you don't want to be held to those standards. So whatever your own policies are, if your policies have a per diem, then you follow the per diem. But I've never heard of that. The problem there is if an auditor comes in and sees that, they're going to question it. And you're going to have to show why the $90 was required. And I think that's going to be a really high bar.
Yeah.
And you're most likely going to get tripped up on it and dinged with an audit finding. And then the problem there is they're not going to then say, okay, 90 was too much. It should have been 40 and you got to pay $50 back. What they're probably going to say is this is not a compliant policy. However much you paid for that travel, you now have to pay back. All right, so that's a serious area of concern. I think that is, there's no I can't point to a rule and say, no, that absolutely says 90 is too much. They don't have that. But you go back to that prudent person standard. Would a prudent person really think $90 a day is necessary?
No.
I'm not going to lie. When I travel and I use the company credit card, I might get a steak instead of a chicken sandwich. But I'm not going to get a $90 steak. And I'm not even on it. I'm not a state or local employee. I'm with a private firm. Even I think $90 would be too much.
Yeah,
so I can't imagine a federal grantee or subrecipient getting by with a $90 a day.